All right, so happy to have you guys today. So I'm super delighted to be here with you guys. And today's training is going to be really amazing. So before we dive in further, for those of you who are joining us on YouTube, if you're watching us on YouTube right now, don't forget to click the subscribe button and ensure you click the bell icon so that you can get notification whenever we upload any new content. All right, okay, this is coming live. All right, so make sure you click the subscribe button and ensure to share this video with your loved ones and on your various group and social media. All right, so let's get started, guys. Let's get started. So let's recognize those who have just joined us for the first time. If this is your first time, you'll be attending our Sunday's class. Please type in one in the chat. If today is the first time you'll be attending our Sunday's class, please type in one in the chat, guys. Type in one in the chat if this is your first time, and if this is not your first time, type in two. So I want to be sure we are on the same page, guys. So I want to be able to recognize those who are new, all right? So everybody, you see that you type in one or two. Quickly, guys, we do not have time, and I have an important uh message to pass across to you concerning how to take the signal. All right, so my assumption now is that none of us are new. So I believe we are all traders and we have been trading before. So for those of you who do not know how the King strategy works, today and once in a while, we'll be talking about the King strategy probably once in a month. Okay, so as to refresh your memory and to be able to answer whatever questions you may have concerning this strategy. All right, this strategy is a strategy you would love to learn. Trust me, but remember, nothing is 100% in Forex, and when it comes to online trading, nothing is 100%. But you want to be able to make consistent profit at the end of the week, at the end of the month. And the joy of it is for you to be able to withdraw some money at the end of the month. All right. There is no joy when you're trading and you are not withdrawing some money for yourself and for your personal use. There's no joy in it. So the joy is just for you to be able to withdraw some money, and no matter how small it is. All right. So guys, I'm so happy to be with you guys today. And trust me, uh, this training is going to you're going to learn more about the King strategy. All right. And you're going to know how and what we consider before we pick a trade with this strategy. All right. But it's important for you to know that, keep remembering, nothing is 100%. All right. So guys, let me quickly ask you, who have been using the strategy amongst you? If you have been using the strategy, let us know in the chat. Probably you're taking the signal, or you're trading this, you're trading using the strategies. Let us know. Let us know. You type in something in the chat. Let us know. Are you using the strategy, or are you taking the signal, or are you just getting ready to take the signal? So guys, putting something in the chat, putting something in the chat. Let's move on. Let's move on. Let's move on. Okay. You don't know the signal, so I'm going to talk about the signal. It's a very simple thing that I'm going to cover under 10-15 minutes. All right. But let me just emphasize more about the strategy, just to teach you more about the strategy so you know how it works further. But believe me, no matter the strategy you want to adopt, it is how long you've been able to work with the strategy that will determine how profitable you can use the strategy. That's why you will hear a lot of people that a particular strategy is working for someone, and another person is losing with the same strategy. So most of the time, when you check the difference between the two, the only difference is that the person that is making money with this strategy, most of the time, they have been working with the strategy for a very long time. So if you can take your time, cool down with a strategy, stop switching over from one strategy to the other, cool down with a strategy, try to use it for at least between 3 to 6 months. All right. So within this period, you will know the nitty gritty about the strategy. You will know the shortcomings about the strategy. So within this period, you will be able to know how to scale over it and how to dodge some bullets concerning the strategy. All right. Even when you're trading pure price action strategy, there will be times that you will lose woefully. Okay. So that is why you want to stick with a strategy. Believe me, my story started to change when I stick to a strategy. And that is what you need. The only reason why you have not been making money in Forex or in crypto or in binary is because you are switching from one strategy to the other. Who tells you that the strategy you have dropped before another one is not a good strategy? It's because you have not been able to work with the strategy for a good number of days or a good number of months. You see, this strategy, to the glory of God, I am the creator of this strategy. But before this particular strategy started giving me money, personally, it was after close to 3 months. Because the first two months, I knew the strategy is good. I knew based on back test. I back tested it and it gave me a lot of return. So I knew it's a good strategy. But before I started making money with the strategy, it took me close to 3 months. So during this period, I was like checking, trying to know how to scale through some trades. All right. So guys, this is what you need. You don't. I'm not saying you should use this strategy. If you have any other strategy you're using and you have not spent enough time with that strategy, give it time. Trade it according to the rules. Give it time. Learn more about the strategy. The more you learn about the strategy, the more you use it, the more you know the shortcomings of the strategy, and the more you'll be able to leave it alone. Hope you getting me, guys. So if your mind is wide open with me this evening, please type in open, everybody, guys. Type in open if your mind is wide open, because my mind is very, very wide open to pour out something good to you concerning this strategy. Believe me. So I'm going to walk those of you who do not know about this strategy. I'm going to walk you through under 5 to 10 minutes before I start pinpointing some shortcomings about this strategy. All right. So then, before I finally uh, talk about how to take the signal and every other thing we need to know. Okay, so this strategy says we want to use few indicators to be able to determine our entry, guys. All right. So I've optimized this strategy 4 times. So now, guys, for those of you who do not know, indicators are lagging. All right. What do I mean by that? Indicators are lagging in the sense that it follows what price does. All right. So price lead while indicators follow. So indicators will be able, if you study very well, you'll be able to know what is most likely going to happen next, what price action is most going to is likely going to do next. All right. So with this, I'm going to be pinpointing that as well. So let's talk about how to bring the strategy, the indicators out. The first indicators we want to bring out, I'm going to be quick with this, guys. So pay close attention. The first indicators we want to bring out, we are using 5 indicators. All right. The first one we want to bring out is 120 exponential moving average. All right. So I'm going to use that as red. All right. 120 exponential moving average. So we're going to leave it at close. apply to close. So you may want to write this down for those of you who do not know the parameters. So apply to close. All right. So I'll click that. So I have this as red, the exponential moving average. So this is basically used to determine the trend, guys. The 120 EMA is basically used to determine the trend. Now, for us to be able to determine the trend, how do we take a trade with this? The first thing we want to do right here is that let's, for example, we want to take a trade on H1. H1 is our trading time frame, which is the time frame we want to trade, right? But for us to be able to do that, we want to be able to have a strong trend. We want to be sure the trend uh, is so strong either to the upside or to the downside. So how can we do that? We want to use higher time frame to confirm the direction based on this moving average, guys. All right. So how do we do that? We use the next time frame. So the next time frame to H1 is 4 hours. So we may call this filter time frame, guys. All right, we may call this filter time frame. So now with this, what do we do? For us to be able to take a trade, the first thing we want to do, since we know that we want to trade on H1, the first thing we want to do is that we want to come on H4 to know the direction the moving average is facing, which is this red, the 120 moving average, to know the direction is facing. Right now, we can see price and some set of candles are already below the 120 moving average. Okay, when you have a case like this where we have the price, all right, this tiny black line and some set of candle below the 120 moving average, which is the red line, then this tells us that we want to look for a sell. So guys, sorry about that. So with this, you want to be able to take a trade that is going for sell alone, because the higher time frame is telling you that price is heading downward based on this formation. Okay, so once you have this is your first confirmation, guys. Once you have this, that you know that you want to look for a sell trade alone, because we have a downtrend based on this 120 moving average, as we have price and some set of candles below it. So this is a sell trade. So now, once you have that first confirmation, look for a sell on higher time frame. So on our trading time frame, which is H1, right here, we want to look for a sell alone, a sell also, right? Because the higher time frame is telling us to look for sell. So on our trading time frame, we want to look for sell also, just sell. So the only thing we want to consider right here, the next thing we will consider right here is that what is this same 120 moving average telling us? You want to be able to see the same condition you see on higher time frame. You want to be able to see it on your trading time frame. Okay, the same condition that you and I just saw on the H4 is that price is below the 120 moving average, and some set of candles are below the 120 moving average. So this is confirmation number 2 that price is going down. Simple. That is confirmation number 2, guys. Remember, confirmation number 1 right here, price is below the 120 moving average and some set of candles are below. That is confirmation number 1 that price is going down. All right. Confirmation number 2, you come to your trading time. You come to your trading time frame. Guys, please, few seconds, guys. I beg your pardon, guys. Okay, so I'm back. So the same condition we've seen on H4. We want to be able to see it on H1, which is our trading time frame. Remember, we are using two trading time frame, H4 as our filter and H1 as the time frame we want to take the trade. All right. So that is confirmation number 2. List. Make sure you put that down. That is confirmation number 2. So let me bring out the next moving average. So the next moving average, I'm going to plot in 2 moving averages right now. Few seconds, guys. Oh, somebody said I'm not sharing my screen. I shared it, I think. Okay, let me check it again. Oh, so sorry about that. Maybe I need to just quickly recap it for you guys. So sorry about that. Thought I was sharing it. Well, I was sharing something else. I'm so sorry about that. So sorry about that. I don't have any option than to just recap this, guys. Let me just quickly recap it. So the first moving average you want to be able to plot is this, the 120 moving average. Once you have the 120 moving average, this 120 moving average is going to be used as the trend. All right, this is going to determine the trend. So we want to trade on H1, guys. But for us to be able to trade on H1, we want to use the next time frame, which is H4. So we are using H4 as the trend confirmation. All right. So whenever on H4, which is this, whenever we see some set of candles and price, which is this black line right here, whenever we see it below the 120 moving average, this is telling us that price is going down. All right, I hope this is clear. So you can match this with all the explanation I've taken earlier on. All right, so once you have it something like this and price and some set of candles is below, it's telling us that it's going down. But if we have it above the red line, which is the 120 moving average, that tells us that price is going up. I hope this is clear, guys. Now, once you have with this, we have that price is going down. So we go on our H1. On our H1, we can see that we want to see the same thing that we have seen on H4. So H4 being the filter time frame called the trend time frame. So we want to see the same condition that we've seen on H4. So the same condition we've seen on H4 is that price is below the 120 moving average and some set of candles. So this is telling us that price is going down. So we want to look for sell alone, okay, which means both H1 and H4 price want to agree in the same direction. All right, it wants to agree in the same direction. I hope this is clear, guys. If this is clear, please type in clear in the chat. If you have any question, put it there, right, guys. So let me know, guys. If you have any question, please let me know. I'm so sorry, guys. I thought I was sharing the screen. But I believe my explanation is very, very clear to you guys. So this is just a recap. Okay, so we've been able to determine the trend that price is on its way down. So the next thing we want to do is just to plot the other 2 moving averages. All right. So now the next moving average we want to bring out is EMA 12. All right, EMA 12. So I'm going to use that as blue. All right, EMA 12 exponential moving average. So you're going to apply to close. So let's plot the same thing. We have that. Let me plot this, the other EMA, which is EMA 5. So I'm going to use that as black. So you also apply to close. It's going to be EMA exponential as well. So now let me click, look at it. Now look at it, guys. This is it. When do we take the trade? How do we take the trade with this? We only want to take the trade when we see the cross between 5 and 12 EMA. Remember, the trend says price is going down, all right, based on H4, and H1 has also confirmed it. So we only want to look for sell, all right. You can see around this place we have a cross up, all right. Here we are not taking this buy trade. Reason is that we only have a downtrend. Price only confirmed to us through the EMA that price is going down, all right. So we don't want to take a buy trade right here. We don't need to take a buy trade, and we must not take a buy trade. We will only take a sell trade. So when do we take a sell trade? We want to take a sell trade whenever we see the 5 EMA crosses the blue EMA, okay, which is the 12 EMA, from the upside to the downside, all right, from the upside to the downside. So this is the area where you want to take your trade, all right. So you want to take your trade exactly when this type of candle close below it, okay. So after the expiration of this candle, then you take your sell trade. You take your sell trade right here, then your stop loss will be above the last high, all right, probably 2 or 3 pips above the last high. I hope this is clear, guys. Why your take profit will be the next low, okay, which is this low, we miss this trade. We miss a very good trade during this past week, and that was due to some my schedule and some other things. We missed some good trades, which I know it was a very good trade. So now with this, guys, you've taken the trade right here. Your stop loss is going to be above here. Your first take profit is going to be the first low, all right. And with this structure right now, this is the low, all right. This is going to be your next profit target. I hope this is clear, guys, all right. So this is how you take a trade with the king strategy. Now you can see we have several cross. You can see we have a cross right here. This is actually a cross after the end of this small candle. So let's say you enter right here. You can see price went down before it's returned back up. So right here you have seen you have almost ratio 1-to-1, right? Now look at, there's another cross right here. You take your trade right after the cross. I hope this is clear. So you want to be able to take your trade when the 2 EMA crosses each other and they are below the 120 EMA. I hope this is clear, guys. Please don't do this mistake and pay attention to this, and most importantly, practice with this on demo. You will understand that it's a strategy you want to work with. So that is it on how to look for the entry with the EMA. All right. So now the next indicator I'm going to plot right here is RSI, Relative Strength Index. All right. Relative Strength Index. By default, this is what you will have. Period 14 is the default period. So we are not using period 14. We want to use period 21. All right. Period 21, we apply to close. So I want to select the thickness so I can see it can be more visible. So we have period 21. Then you come to level. Under this level, by default, this is what you have. You will have 30 and 70. 30 being the oversold, while 70 being the overbought, all right? But we are not using that. This strategy, we are not using that. We want to use 50, okay? 50 means the average of 100, guys. The average of 100. So how do we get the 50? Come to this ad, click on it. Once you click on it, this is what you have. Type in 50. Once you type in 50, there you go. Okay, let me try to change the color to you can change this to anything you like. This is what I prefer. So by doing this, by including 50, it means I already have the, what is it called? I already have I have 100 divided into 2. So if you like, you may delete this 30 and 70 if you like, but if you don't like, you may leave it. But let me delete it so that it can be more clearer to you guys. Just click delete. All right. So once you have that, click on OK. Now look at this, guys. It's getting more clearer. I hope this is getting more clearer, guys. Now look at this, guys. We want to be able to put in more indicators to agree at the same time. All right. To agree at the same time so that we can be sure that the trade is most likely going to go in our favor. Okay, reason why we have more indicators is simply because indicators are lagging. So in a case where you have 2, 3, 4 indicators agree in the same direction, it tells you that price is most likely going to do what you want. I hope this is clear. So that is why we have more indicators included in this. All right. So now, the first thing, remember, on H4, you want to consider the trend. And the trend based on this chart says that price is going down, which is on H4, all right? So coming to on H4, it says our price is going down, right? Now, coming to our trading time frame, which is H1, it says that price is going down. That is confirmation number 2. Those are the first 2 things you want to consider before you start considering the rest indicators. Now, we have a cross right here telling us we should sell. Do we sell immediately? No, we don't sell immediately. We want to be able to see RSI agree in the same direction. Now, how do we consider the RSI? Whenever the RSI is below 50, this is an additional confirmation that this is a good sell trade. All right. Whenever the RSI is above, in the case of buy, all right, guys, don't misunderstand this. All right. If you are looking for a buy signal, you want to see RSI above the 50. If you are looking for a sell signal, you want to look for RSI below 50. All right. Because we are looking for a sell. So in the same direction, we want to see RSI below the 50. I take it once again. Once the RSI is above, then we want to look for a buy in proportion to buy signals right on these indicators right here. All right. And in the case of this chart right now, this is a sell signal. So we want to look for a sell at the same direction this 5 and 12 moving average is going, which means the same time they finish crossing. All right. So how can we be able to determine that? Look at, you can see the cross right on this candle has not happened. All right. But on this very candle, this is where the cross happened, where I have this vertical line. So you want to take your trade, the beginning of this trade, which is where I have this line. I hope this is clear. So why did I put this vertical line? Just for you to be able to see Okay, for me, I don't need to put vertical line, but for educational purpose, for those who cannot spot it clearly, so put your vertical line like this. Then you want to see your RSI at this level that is below 50. You can see the march is below 50. I hope this is clear. So this is an additional confirmation that it's a good trade that you can take. And you can see, as a matter of fact, if we have entered this trade right here, you can see price has dropped down in about 40 pips, which is over 1 to 1. Okay, I hope this is clear, guys. Now this is it, guys. Let's say the cross happened right here and RSI is still above 50. It's a no-go area. We have the cross right here. We have the cross right here, all right? After this very candle, after the close of this very candle, we take a trade. Once this candle opened, right here, we have this line. So the same line where I have this line, trace it down. If your RSI is not below 50, ignore that trade. I hope this is clear. If your RSI line, which is this blue line, is not below the 50 line, ignore the trade. Then it's still, the downtrend is still not strong enough for you to take that trade. All right, despite the fact that condition 1, which is the higher time frame, confirmed that is going down. Condition 2, which is this one right here on the entry time frame, shows that it's going down. If this one says is still above the 120, the 50 line, you want to ignore it. All right, I hope this is clear, guys. But 70 to 75% or 80% of the time they agree. But there are cases that this will cross down, why this will be above here. So with that trade, you want to step aside. I hope this is clear. If this is clear, everybody type in something in the chat, type in yes in the chat if this is clear. And if you have any question, please let me know quickly. If you have any question, let me know in the chat. So while I bring up the last indicator, okay, so while I bring up the indicators, I'm going to tell you the shortcomings right there. Okay, somebody said clear. All right, thank you so much, D. So I'm so happy to be with you guys. So now the next thing I'm going to bring out is the last indicators, all right? Is the last indicators. So that is also under oscillator. We want to bring out stochastic oscillator. Stochastic oscillator, by default, it's, oops, sorry about that. Let me just remove it. Okay, by default, stochastic has 1533 by default. Default setting is 1533, but we don't want to use that. We want to use our own setting, which is 14333. 14333. So the only thing you want to change right here is 14. You leave this, don't touch any other thing. Right? So you have that, go to level, you don't want to do anything at the level. All right? So the only thing you want to change on stochastic is make sure the parameters is 1433. I take it again, 1433. So once you have that, click on OK. So once you click on OK, this is what you have. All right? So once you have this, why did we have oscillators included in this strategy, guys? We have oscillators, stochastic oscillators included in this strategy because we want to be able to trade continuation. All right, continuation of trend. And these indicators is added in the interest of newbies, beginners, those who cannot easily recognize price action or candlestick pattern. So These indicators, this indicator, which is stochastic, will tell you where to take continuation entry. I hope you understand. If you do not understand how to read candlestick pattern, I hope this is clear, guys. Now, how does this work? Remember, the first entry you want to take, right, is to look for 5 and 12 EMA cross. So once that happens, you are in the first trade with this one. Okay, so the next thing on how to look for more trade is when you have stochastic crosses each other from the upside to the downside. Let me try to enlarge this very well so that you guys can understand. When we have the stochastic crosses each other from the downside to the upside, in the case of sell, remember we are looking for a sell. So we want to look for anything that is going down, not up this time. We are looking for a sell. So we want to look for something that is going down. All right. So now the continuation says we want to see price pull back into the 5 and 12 moving average, but without cross. Without cross. Okay, pay attention, guys. Without cross. We want to see price, which is candle, pull back into the 5 and 12 moving average, which means you will see something like this. Okay, price and candles will pull back and touch the 5 and 12 moving average. So once you see something like this, if you can recognize candlestick pattern, you will take your sell trade. But those of us who do not understand, the only thing you want to take right, want to wait for right there is that after you've seen price pull back into the 5 and 12 moving average, the next thing you want to wait for is to see this blue line crosses the red line to the downside. The moment the blue line crosses the red line to the downside, then take your trade. And we can see it's happened right on this candle after the close of this candle. So the trade, you're going to take it right here. All right, right here. And your stop loss will be above here, something like this. I hope you understand. So until price goes back up like this to this level, that is when you are out in loss. I hope this is clear. So once you take your trade, once you see the cross between 5 and 12 moving average, take your trade, sell trade, put your stop loss high right here, and use ratio 1:1. What do I mean by that? Ratio 1:1 means that you have, let's count it. You have entered right here, and stop loss is 22. So you want to use your take profits as 22. I hope this is clear. You want to use your take profit as 22. And if you want to get more, you can use ratio 1:1.5. Okay? In this case, you have used 22 as your stop loss. You can use 33 as your take profit so that you can get something more. In the case when you have some losses, the extras you have on that can give you some trade. And that is why we have been able to make some money this past week, because we only won 11 trade and lost 9. All right, and we are still able to come out profitable with at least 6% profits. All right, so guys, that is it. But where is the shortcomings? Where is the shortcoming? The shortcoming is that most of the time, guys, you want to wait for this stochastic to go back above the 20. Remember, all this explanation I'm giving you right here is for sell purpose. All right, so for buy purpose, you have to turn it upside down. But it is important you understand this very well. So once you understand one part very well, then turning it upside down to the next signal, to the other side of the signal, will be very, very easy for you. So now look at, one of the shortcomings I can see based on my experience with this strategy is that most of the time, let me just say between 50 or 60% of the time, when you take a trade that is below the a sell trade that is below the 20 line with continuation, you can see that 50% or 60 of it you will win, which is not so good enough for me. So most of the time I want to be able to see the the stochastic, the two line goes back uh into the line which is above the 20, goes back above the 20, then on its way down I will catch the entry, which means around this place its price is already oversold. So it means that any moment from now it can reverse, and you can see we have taken a trade right here. We have taken a trade right here. You can see we expected it to keep pushing down, but now it's trying to pull back up a little bit. So now you can see right here, you can see what the stochastic is doing is back into the line. So the next thing we may see is that price may keep going down. It may keep going down. So with this, most of the time you want to wait for it to take the continuation. You want to wait for the stochastic to return back into the back above the 20 line. All right. So once this cross happen, we can expect 70 to 80% of the time it will deliver once it goes back into the what do we call it? So once it goes back above the 20. I hope this is clear, guys. Now, this is not a very strong trend. It is not a very strong trend. How do I know that it's not a very strong trend? It is a good trend. Price is heading down. All right, but it's not a trend that have too much volatility. There's no much volatility with this trend. So I'm going to try to show you a trend to see to be able to explain that to you. Okay, so with a trend that does not with a pair that does not have much trend, you want to be able to see the stochastic goes back into the above the 20 before you take your trade. So that most of the time it will deliver. All right, I hope this is clear. So this is the reason why I said you want to be able to take your time to work with this strategy or any strategy you are using for a particular period of time. So during that time you will understand it very well. All right, so I hope this is clear, guys. If this is clear, please everybody type in yes in the chat. If you have any question, let's put it in the chat. Let me quickly look for a strong trend for you so that before I talk about how we will take a strategy with take a trade with the king strategy, and if you miss a trade, how to enter it and how to avoid it completely. So everybody type in something in the chat. I want to hear from you guys. Okay, so Mr. Charles said clear. All right, I'm so happy this is clear to you. Who else? If you have any question as we roll, please type it in the chat. Let me know in the chat. We have about 15 to 20 minutes, between 15 to 25 minutes to round up this session, because this session is capped 1 hour every Sunday. All right. So who else? Everybody, we are 10 on the call right now. So everybody type in something. If this is clear to you, let me know if this is clear to you. If you have any question, I'm still waiting to take your question. All right, let me look for a sharp trend to be able to explain the continuation for you guys. So, but for this, all right, you need to just take your time. D, you need to take your time to, it's very, very straightforward. Believe me, trust me, it's very, very straightforward. But Probably you mixing something, but let me try to uh, chip in few explanation. Right. It works on anything, Mr. Ladokun. The, that is why it is called the king strategy. All right. You see, guys, I've been very soon we'll be launching crypto. Very soon, crypto, and believe me, I have been trading crypto for a very long time, and I feel this is the time for me to just. I've not been talking about it because I'm not ready to uh, put it on the group, but I think it is the time is coming for me to just bring it to you guys. Okay, for those who, because I trade crypto on a long time, I don't trade crypto on the buy and sell it quickly. No, with that, that is not an investor's mindset. If you want to trade crypto, have the investor's mindset, then you, believe me, a lot of money you can make on crypto. So let's leave that aside. This strategy works on anything: crypto, fixed, forex, shares, anything. All right. It's just that I have not been very, very active with shares. All right. But anything VIX, volatility index, or whatever have you, anything that has charts, trade it, then you'll be happy with yourself. So let me quickly talk about the continuation. So if you understand candlestick pattern very well, all right, for me, I am not going to take this trade on the continuation. Why? Because the candlestick pattern right here shows that it's not a candlestick pattern that I may look for to enter continuation. So once you see price pull back into the 5 and 12 moving average, you want to see bearish engulfing. Okay, bearish engulfing. After the bearish engulfing, the next thing you want to see is pin bar. I said pin bar. Shooting star. You want to see inside bar. All right, we may consider this an inside bar, but this is not an inside bar. The wick is longer than this one. Okay, so you want to be able to recognize your candlestick pattern. Once you see your candlestick pattern, this tells you that you are ready to go down. All right, you can see that is why price action is leading indicators. I hope this is clear. The person who asked the question. So right now with this, I may not take this trade. All right, I will not even take it because I use price action to take this. Sometimes I match it up with the stochastic. So the more you know in forex, the more you earn. I keep telling all our students, the more you know, the more you earn. So sometimes I match candlestick pattern with stochastic before I take this trade. A trade like this, all right? So sometimes when you see that stochastic and candlestick pattern form in the same direction, it's a very, very strong one for you guys. All right? You will agree with me that this may be this is bearish. I'm coming. This is bearish engulfing, but with this, I may not take this trade. All right, I may want to wait for stochastic to cross. Reason is that I have seen this gone above this one. All right, had it been right after this one, I saw engulfing to the downside, then it's a good trade for me to take. So I'm not going to, I may not take this trade because this high, which is a continuation high, is higher than this one. I don't know if this explanation is getting is clear to you. I will take it again. We want to take continuation when we see that price pull back into the 5 and 12 moving average. So right after the 5 and 12 moving average, the next thing we want to see after 2 or 3 candles is engulfing candle, telling you that price is going to continue to the downside. But based on this candlestick formation, this is not a bearish continuation pattern. So we ignore it. All right. Now you can see after 4 or 5 candles, we have bearish engulfing. So I may not take this trade. Reason is that because the first pullback that comes into this place does not come out with an engulfing. So this one may be invalid. Reason is that had it been this one has gone above this one, and there is no cross between the 5 and 12 moving average, it will be a very good one. So the latest pullback that you want to see between the 5 and 12 moving average, you don't want it to go below the pullback you've seen. I hope you understand, except there is a long distance, probably like 15 or 20 candles. All right. I think we have it somewhere here. This is valid. All right. I hope you understand this. Sometimes this may work, it may keep going down, fine. But at times you may want to skip some trade. All right, because you want to take a trade that is very, very clear in your mind. Even if you lose that trade, you will know that okay, you follow the trading strategy properly. I hope this is clear. So when you see something that is not so clear to you, just stay away from it, or trade that particular setup on demo just for you to be able to see how it's going to go. I hope this explanation is clear to you. I hope this is clear, please. So let me look for a sharp trend. I want to be able to look for a trend that you can. Okay, let's use gold as an example. This is our analysis on gold, guys. So based on buy entry, on continuation, you can see we want to be able to see the 5 and 12 crosses each other. You can see there's no cross around this place. Even if the cross does not happen, and later on you see stochastic is giving you signal. You can see right now we have signal around this place because this place is telling us that price is going up. Let me try to mark it, then we check it on H4 if we are on the upside. Now you can see we have this vertical line. Look at the 120 moving average. Price is going up because we have some set of candles above it. Now I come to 1 hour, which is our trading time frame. So for me to take this trade, you can see the 120 moving average on 1 hour, which is my trading time frame, also confirms that price is going up. Now, there is no cross between 5 and 12 moving average. So with this, you only want to trade with continuation. I hope this is getting clearer, guys. You only want to trade this buy entry with continuation. All right, because the trend has confirmed to you that price is going up. Look at RSI, confirms to you that RSI is very well above the 50 line. All right, it's very well above the 50 line. So you want to wait for stochastic to cross. After the cross, take your trade. So if you are taking your trade where we have this horizontal line, look at price went up, and right after that you can see another entry we have right here. Another entry we have right here. You can see, guys. I don't know if this is getting it's making some sense to you guys. Okay, so now look at, I said you want to wait for price to pull back into the moving average, the 5 and 12 moving average. So when you see your candlestick pattern, you want to take a trade. Look at engulfing, bullish engulfing candlestick pattern. For me, I would have taken a trade right here, but I did not trade I didn't take this trade. So if you have taken this trade right above here, all right, your stop loss is going to be very little. That is why I like the continuation pattern where we have small engulfing candle. All right, just put your stop loss right above here. So with that, you may have ratio 1 to 2, 1 to 1, 1 to 3 and above. So you can see, guys, so you want to be able to wait to see price comes into it. You understand candlestick pattern, take it. If you do not understand, this is going to be where your entry will be. You can see this is where we have the stochastic cross. So once the stochastic cross, this is where you take your trade. Beginning of this candle. All right, look at and enjoy your profits. I hope this is very, very clear to you guys. That is not where I'm going. I just quickly dab into that. I want to be able to look for a very strong trend trade. Let's look just a minute. Well, we have a lot of candlestick pattern that you can use to determine continuation entry. So once you know candlestick pattern, you are good to go. Let me try to look for a strong trend, guys. Few seconds, trying to look for a very strong trend. Where we can have where I can be able to tell you how to scale. Okay, I think I have one right here. Let's look at Euro NZD. All right, look at Euro NZD, guys. Between here and this place, you see that we have a very strong momentum to the downside. You can see a sharp move. In a case where you have a sharp move to the downside, guys, the continuation, even if you take it below the 20, is most likely going to deliver. 75% of the time that will deliver. When you see that there is a momentum on that particular chart, a momentum in the sense that price is dropping sharply. All right, price is dropping sharply. Look at somewhere here. Let me try to mark it. This place has returned back into the 20. Look at, let me take it away from there. Somewhere here. Okay, this is not a good one. Let's look for another chart, guys. Let's look for another chart. Okay, I think we can use this. Now look at it. So right from where we have this line, we may say this is a very strong trend. You can see price pull back into the 5 and 12 moving average. Look at around this place, price pull back into the 5 and 12 moving average. You can see we have the continuation candle. So let's say we have the continuation candle. You can see the cross between the EMA, the stochastic. You can see it's happened right here, and it's still below the 20 line. You can see because we have a very strong sharp move. All right, based on this move, you can see we have a very strong sharp move. That is why you see it keep going down. All right, but in the case of USD card that I showed you, you can see where is it? You can see price is just, you can see it's not as sharp as this. It's not as sharp as GN. I don't know if this is making some sense to you. So these are the things you want to pay attention to. But the more you work with this, the more you understand it. Even, believe me, there was a time I had a student, I think that was early this year, January, I think, who was telling me some things about this strategy. I was like, wow, if you can do this, every other student can do it. It was giving me some shortcomings, some experience that he had about this strategy, which has been working well for him. And I said, fine, that is better because you have been able to work with the strategy and you understand it. Keep doing it, keep doing the same thing, and you keep making your money. But there will be time it will not work. But most of the time it will work and you keep making your money. That is it. But the goal is just for you to be able to come out profitable at the end of the week and overall at the end of the month. I hope this is clear, guys. So if this is very, very clear to you guys, you still have some things that is not clear, please put it in the chat before we dive into the last part of this training today. See, I'm always happy to be here with you guys, but a lot of people believe it is money, 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 money. No, it is not all about money. And another thing I want to tell you guys is that don't just keep learning. Put all what you are learning, start putting them into action. Start acting on them. It is when you start putting them into action, that is when you will be able to have some level of confidence. You see, a lot of people have learned to the extent that if they keep writing a book, even some professors cannot stand them. But their problem is that they are not putting what they are learning into action. All right. So if you cannot if you cannot go for paid training, go on YouTube. There are several things that you can learn on YouTube, but the only thing is that information may not be as deep as what you will have in the paid training. And believe me, that is what will happen most of the time. That is what will happen most of the time. All right. So in paid training, you may not be you have access to something that is very, very unique compared to free training or YouTube. That is the gospel truth I have to tell you. But believe me, 75 to 80% of what I give to all our students, paid students, is what I share with you guys whenever we want to share with you guys any free training. All right, and that is more than enough to learn with. All right, I hope this is clear, guys. So everybody, you have a question, let's have it in the chat, please. Let's have it in the chat. So if there's no question, please type in no. Type in no. I want to be sure we are on the same page and we are moving together, guys. Type in no in the absence of no question, so we can push further to the last phase of it. So we have less than 10 minutes to just round the whole thing up. All right, so I'm so happy to have you guys. So let's talk about this signal. Let's talk about the signal. Let me go back to UCAD. Now, I'm going to use this as a very big example. You see, I realized that based on my experience with this strategy, 85% to 90% of the time, once we have the cross between 5 and 12 moving average, price will start running down in that direction. It will start running in that direction. 85 to 90% of the time. Go and pay attention to what I'm talking about. Whenever the cross between 5 and 12 moving average happens, 85 to 90% of the time, you will see that price will start pushing down seriously. Why is that? So with that, if you are not monitoring this 5 and 12 moving average when it's about to cross, you are most likely going to miss the entry. All right. So based on some reports I have gotten from some students and some guys taking the trade on the group, they tend to miss good entry. All right. And the rule says don't run after the market. Do not chase the market. So now this is our entry. Let's, for example, I called a trade right here where I have this horizontal line. Where I have this horizontal line. Okay. From all these indicators, which one can we consider most reliable or powerful? Nothing is, you see, when it comes to indicator, you don't use one indicator to determine a strategy. Otherwise, the time is going to fuck you up. Oh my God. The ground will not be able to hold you. Damn it. It may be, you may have been making money with just one indicator, just one, without price action. You may have been making money, but the day is going to disappoint you. Hey. Okay, so based on my experience, indicators are lagging, and you will hear that from anyone who have been trading for a very long time or from a while who has learned so good. Indicators are lagging, so you want to be able to match minimum 2, but to me, I need 3 or 4 indicators. I need minimum 3 to agree in the same direction. before I can take that trade with indicators if I'm not trading price action. So you want to be able to use 3 or 4 or more. Based on this now, you will agree with me that we have more than 5 what is it called? We have more than 5 we have 5 indicators, right? But we have more than 5 rules. Number 1 rule says check on H4 trend. Where is the trend? Number 1 rules. Number 2 rule says on your trading time frame, check the trend, which is the 120 moving average, the same thing as H4. That is 2. Number 3 rules, when you see the cross between 5 and 12 moving average, that is number 3. Number 4, RSI crosses. All right. I hope this is clear. And when you're using number 5, you use stochastic. So in the case of in the absence of stochastic, we have 4 rules right there. Okay, I hope this is clear, guys. So let's keep moving. So now, let's say we want to take a trade right here. If I call a trade right here and you miss the trade, please do not chase it. Let it go. Let it go. Please do not chase it, because I had some report during this previous week. I think 2 or 3, they were chasing the market and they later got their hands burnt. So do not chase the market. Once it's go, you see that, let's say I call the trade right around here. If it has gone in 5 pips, let it go, depending on the volatility on the market, because like GBP NZD, the volatility is much. AUD, some AUD pairs, the volatility is much. So let's say if price has gone in 4 or 5 pips, let it go. But make sure you maintain the level of profit and stop loss I give you. Even if you have taken a trade right here, I have caught it right here, and price has gone to this place. This is where you have taken yours. All right. I may have ratio 1-to-1 between my entry right here to this place. So you have taken your own right here. Make sure your take profit is the same as what I have, while your stop loss will be the same as the number I issued out. I hope you understand. Please, guys. So even if you take it few pips above or below the entry level I called, just if you think you can't accept it, probably it has gone in 10 pips, just leave it, or you set your pending order. If price has gone in about 10 pips, 6 pips, and you think it's too much for you, if I have entered right here, I caught it right here at 25.33, and price has gone to 25.20, which is about 13 pips. It has moved. So you want to set your pending order right here at 25.33, hoping that price will come back and take you in that trade. All right. So just put your pending order here, maintain the same stop loss and the same take profit. So if price should come back in there in the next 3 or 4 candles, fine, it will trigger your trade and you will continue rolling in profit as others. And if price does not come there, you see that it's taking much time than you expect, just cancel it. I hope you understand. Just cancel it. And another thing right here is that if you think that, okay, it has gone in 3 pips, it has gone in 4 pips, you can still take it. It has gone in 5 pips, you can still take it. So take it, maintain the same stop loss, maintain the same profit level. Believe me, at the end of the month, at the end of the week, will come out profitable. That is one thing I'm so sure about this strategy. Sometimes in the market makers will play with the market in a way that price action will get a lot of people's hands burnt. It's the best, price action is the best, no doubt. But there are times that market makers will render price action useless and let a lot of people lose money. They won't render it useless, I beg your pardon. They will like use liquidity grab. Okay, liquidity grab may come in before price start going in the intended direction, and that is what gets a lot of people annoyed. All right. So during that period, indicators can never ever do that to you because it's following price. I hope you understand this, because indicators are following price. Price moves while indicators follows. So in that, it will be very, very hard for market makers to play with indicator traders. I hope this is very, very clear, guys. So this coming week, we're taking it upon ourselves. Believe me, even if at the end of the week you are able to come out with 5% profit, it is it is much. No bank can give you 5% profit at the end of the month. Sorry, guys. Do we have any accountant or any banker in the house? If you're a banker or an accountant, please type in one in the chat. If you're an accountant or a banker, type in one in the chat. We'll be ready. We'll be ending this section in the next 5 minutes. We should be ending this section in the next 5 minutes if there's no questions from you guys. If you're an accountant or a banker, type in something in the chat. So no bank can give you this. In fixed deposits, they cannot give you 5% every month. So if you have a system that can give you consistent 5%, and that is very small compared to what we can get, and I would say that is going to be one of the worst week we are going to have when we have 5% or below. It's going to be one of the worst week. But there will be a week or a period where we have some losses below our starting capital. So no qualms, it happens once in a while. So as far as this year is concerned, I can't recall if I have taken a trade in a week where I have some loss at the end of the week. Okay, the worst that has happened in the whole of this year for me, the worst that has happened is I have less than 4% profit, which is about 3.1. And during that week, I think that was in early February or something, or second week of February. So during that week, I had several losses with some winnings. So the winnings along the line covers, and I still ended in some profit. So, and I have good report from students week in, week out concerning this strategy. So you just need a system that can give you consistent profit. You see, let me quickly advise us under 2 minutes before we end this session. The reason why a lot of people are losing in this business is their mindset. They want to get 100% every week. They want to get 100% every month. I am not saying it is not possible. It's possible, very, very well possible. I have done that a couple of times, and I will still keep doing that. But you don't want to come into the market with that mindset every time. Once you have that mindset, you will eventually, number one, it will cause you to overtrade. Number two, you will start taking wrong entries. Number three, you will be greedy. Number four, emotions will control you, and so many other things that will contribute for you to just lose that money. But when you have this target that, okay, I've made 5% this week, glory be to God. At least your capital did not go down. You still add some to it. The next week you may make 10%. But believe me, if you make 10% profit in a week, it's much. It's much. And you will get to a certain level where you can make 30%, 40%, 50% for yourself every week, every month. Then you will be grateful. So on our binary, I tell guys at the end of the week, and we appreciate what God has been doing in our midst. I tell guys that at the end of the week, our goal is to be able to come out with at least 15% profit every week. And that has been happening with us in the last 3 weeks now. Although our goal right there is to come out with minimum 5% every day. But there will be days that we will lose. And we can't take it away. There will be days that we will lose. So those winnings we have will cover for some losses we will have in between. But overall, at the end of the week, we should be able to come out with something reasonable. So at least 15%, that is our main target. If you have more, if you have 25% and above, 30%, we'll be more grateful to God. But on the worst case, we have 15%. Even if we are able to get 10%, that is a very good one every week. Compound it at the end of the month. All right. So let's, for example, you're trading Forex. At the end of the month, you are making, let's say you are making 7 to 8% with Forex. For example, on binary, you're able to make 10% every week. You have crypto, and at the end of the week, you're able to make like 15 to 20%. Come on, guys. That is invariably nothing less than 30% on your trading portfolio at the end of the week. Now compound it to month end. It's going to be a good one. All right, so this is another thing for you guys to do. You want to leverage on those who have been doing it. Leverage on, you may want to concentrate personally on yourself to do Forex, right? But you can leverage on others who are doing it well on the other side. Copy them, go online with them, trade with them. Just for example, like we have the binary. Come online with us, trade with us, achieve your profit right there. But your main focus, you are, as a beginner, you focus on Forex, you're learning it. Then you'll be able to take a trade with yourself confidently, trading Forex. Later on, while you have the same knowledge, remember that you are still in the game with binary. You are still learning that indirectly. Your focus is also on that. Gradually, as you master Forex, it will be very, very easier for you to just, to trade binary on your own. A student was asking me sometimes, said, Coach, why is it that you trade this, you make profit, you trade this, you make profit, you trade that, you make profit? It's because the same knowledge is what I share with all of them. But it may be hard for a beginner, just like what I have just explained. It may be very, very hard for a beginner. But once you know what you're doing, the same knowledge is what you share into all of them, with just little different. In fact, some of our students want me to trade VIX. I think the person is right here. I have someone who also chatted me on that right after him. He was talking about VIX. I said, no, I can't trade everything. Let me just stay on the crypto, Forex, and binary. Then later on, we may switch on to shares. And if we have a lot of, what is it called? If you have a lot of requests on VIX, believe me, we will trade it and we'll make money. Okay? I'll trade it and I'll make money with it. So that is just it. But it's just that I have to dedicate time for this. So the time is not even enough. Let me just put it that way. All right? Coupled with my personal means. So if I have a system in my portfolio that I can be able to be confident with 50% profit every month, 30% profit every month, 20% profit every month, that is a good one. So my last final word is that, guys, leverage. All right? If you focus on Forex, keep learning it, keep seeing to it that you'll be able to trade on your own and make money with it. All right? But along the line, leverage on others, keep taking trade, keep following, keep attending live class, keep attending live lecture. Just leverage on it, make money, and keep piling up your money. Keep making money with that. Then you will see that before you know it, your portfolio will grow. And my final word for you guys is that don't have the mindset that you want to create a portfolio with $100 or $200. Okay, I understand the situation of the country right here, precisely in Nigeria and Africa. For you to get up to $500, you need to work yourself hard. If that is going to take you 3 to 4 or 5 months or 6 months to put the money together, do it. Save up gradually. Save up gradually. All right, and follow the right channel once you start your investment. Before you know it, your $500 at the end of the month can start giving you minimum of $150, $200. Remember, the source that you used to raise that money is still there for you to generate money. While this one is still there making money, before you know it, you will grow. All right, the crypto, we are coming on crypto very soon. I believe a lot of you guys will love the crypto. It's all about investments. My golden advice to those of you who are trading crypto is that forget about the fact that you want to start going and trading crypto on the daily whatever. It's good. If you have the time, go there, trade daily. It's good. But investment on crypto is just the main thing I'm sharing with you. Investment on crypto, you want to invest on crypto, leave it for 5 months, leave it for 6 months, leave it for 1 year. All right. So you know that this is my investment capital. I'm using it to trade crypto. I have $500. We share it on assets. All right. So collectively on that asset, after some period of months or weeks, you will see it grow. All right. So that is my advice. But a lot of people want to plant a seed right now and reap the benefit of that seed immediately. It is not possible, and it's not going to be possible in this world of trading. So guys, any question in the chat before we call it a day? Any question in the chat? Any question? Any question? Any question? I'm so happy and super delighted to be with you guys every Sunday. All right, and by the grace of God, we are going to be here next week with another bank topic. So anybody with any questions? So if you do not have any question, just type in no. All right, everybody type in no. In the absence of no question, type in no. So get your mind open, get yourself open, leverage, and make sure you do the right thing and keep learning. All right, keep learning. Believe me, it's going to pay you off with time. Even if you pay some money for training and every other thing is going to pay off. If you have blown some accounts, don't quit. Trust me, you're going to get it back sooner or later. Right, but keep learning. The race is not meant for the sweet. Slow and steady wins the race. So thank you so much, guys. Thank you so much for having me. I appreciate those of you who are here today. This is the benefit of being online. I know a lot of people are just waiting for videos to be posted on YouTube. We'll post it as usual. But trust me, live class, live session is more important than watching videos. All right. So thank you so much, guys. I see you guys next week, and I see more of you on the group. For those of you who are not on our Telegram group, look, scroll up on your on our WhatsApp group. You will see the link. Click it. Join our Telegram group. That is where we'll be posting our daily signal, all right, which is the King strategy. All right. And for those of you who have not joined our YouTube channel, scroll up on the group. You will see any of the link, any of the YouTube link. Click on it, go and subscribe. All right. So let's be part of this community. Let's be part of this community. And one more thing, lastly, everybody, I want to visit you. If truly you have gained some value today in this class today, based on what you've learned, you have gained some value. Let's appreciate what God has done in our midst by going on our Telegram group. Let's put in our comments right there, either positive comments or negative comments. Let's put it there. It will help others to decide. All right. So that is my request from you guys, and I believe you guys will do this for us. You will do this to help every other person. So thank you so much, everybody. I really appreciate you, and thank you so much for being here. I'll see more of you next week. Bye bye, and happy trading.